Now, our next segment is the US GDP. So, the new normal, low average or average poor growth is what we're seeing in the United States for a long time. We'll have live coverage of that and also of the ECB. Okay, so the US GDP released on Friday at 12:30 GMT. It is the first release. The United States publishes a first estimate, a second estimate, and the final one. The final one is often revised years later. But anyway, the first release has the biggest impact on markets, and it tends to have the biggest factor of surprise. Okay, and this time things look a bit weird. When I say weird, I mean there's a big division between the soft and hard data. Okay, we'll see that in a moment. Will low growth trigger problems in the job market? That's another open question. So for the Federal Reserve, U.S. economy is gaining jobs, even wages are rising, inflation is ticking a bit higher, but growth is very slow. And in many cases, employment lacks growth. So when we have slow growth for a long time, then we might see a few months down the road, 6 months, 12 months down the road, a drop in employment. So these are the big questions. So let's look at the hard data. Okay, the hard data is mediocre, to say the least. Retail sales don't look very good. Consumers are not buying that much. Core durable goods orders, a figure that best reflects investment, is unimpressive as well. Only inventories look okay, and when we have the replenishing of inventories, the next quarter we could see a depletion of them. And just look at the growth figures that we've seen in 2016, only 1.6% growth in the United States. Growth was actually stronger in Europe than in the United States. We have the Atlanta Fed estimate for growth. It shows it under 1% annualized, 0.8 or 0.9 if I'm not mistaken. Okay, so doesn't look good at all. All right, so these are the hard figures, what we know about the US economy in Q1. On the other hand, the soft data looks much better. Soft data, we're talking about business and consumer surveys. So the ISM PMIs, those released just before the NFP, the build-up to the NFP, they look good. They show robust growth. Consumer confidence, even though it fell now in April, it still remains at sky-high levels, at decade highs. The University of Michigan's consumer confidence also looks good. And the New York Fed estimate, which relies more on soft data, which uses soft data in its model, shows growth above 2%. So who's right? If everybody's confident, the economy should look better. But the figures we have don't show it. So I believe we'll have a more tendency to the downside. Anyway, the Fed sees solid job gains, gradually rising wages. Inflation is healthy, but these figures could be lagging growth. We could see weak growth now, strong jobs now, and further down the line, employment situation catching up with growth, and growth even falling to negative numbers, to a recession. We don't know. It doesn't look like that, but it doesn't look too strong either. So let's talk about Friday. Expectations stand at 1.3%. All right. So that's an annualized level, not a quarter-over-quarter level. That means that quarterly growth is expected to be only around 0.3%. 2% or above is great news. It'll be, of course, a significant beat of expectations. And back to that new normal of 2 to 2.5%, which was not seen in 2016, but was seen beforehand. 0.5 or lower, which means quarterly growth of just 0.1, basically a stall in the US economy, would be very disappointing. If it's even worse, if we have outright contraction, then forget about rate hike in June. And I would not rule out a contraction in the US economy. Again, the hard figures don't look that good, okay? And that will be a big shock to the US dollar. Okay, so that's the conclusion. What is the bias for the US dollar coming into this GDP release? I would say it's quite neutral. A lot depends on Trump's tax plan. We're seeing the dollar again stronger against commodity currencies, stronger against the yen, but weaker against the euro and the pound. So I would say it's a mixed bag, and it really depends on the figures. If we have figures as expected, we'll see the dollar in the same place, but if we'll see a beat, it's higher. So it's basically neutral. I wouldn't say there's a specific bias like with the euro. The euro is in an uptrend. Okay.